Welcome to the Stock Option Assassins free trade of the week. My name is Eric, and today is Wednesday, March 25th, 2015. And this week's edition of Trade of the Week, we're going to pick up some volatility protection as the market seems to be pulling back here. And if you haven't done so already, be sure to subscribe to our YouTube channel for more technical analysis videos and strategies. So real quick, it's about noon. We're going on the lunch hour, and the market's really starting to kind of pull back here. It's nothing super detrimental. I don't have the moving averages on here, but we're running in pretty close to the 50-day moving average, and we're actually kind of getting oversold here on a short-term basis. So the issue I have with the overall market isn't, not that it's hugely bearish, but the fact that we are potentially putting in a lower high here. So we had this sort of breakout. We pulled back. We rallied back up, but we were unable to sort of retest this 212 level on the SPY, and then ultimately we're starting to pull back here. So the question is this a pullback before we head higher? This to me looks like it's more setting up for some sort of triangular pattern, something to this effect. We don't know where this is going to end though. Right now we have a lower band on our Keltner channel about 205, but the issue I have that's kind of a lot of talk is the dollar here. And traditionally during the QE days, as the dollar went lower, stocks went higher, and then as stocks went higher, the dollar went higher. But now it seems like the dollar may actually be hurting us. So right now we're trying to determine, is there an inverse correlation with the dollar, meaning if the dollar pulls back, are stocks going to pull back as well? And today that seems the case. The dollar's down 0.5%. The market's down 0.7% right now. But recently, though, during this pullback in the dollar, there were some spikes where the dollar pulling back was actually good for stocks. And I think if the dollar finds support here, which this is getting close to the 50, I don't have that on here as well, but if dollar finds supports here and the dollar really starts to break out because of the euro and Greece and all that stuff really breaks down, and the dollar breaks out, I think that could actually be more negative for stocks. So what I'm going to do, and I've already done this, is I've picked up some VXX, just the shares, no options. This is a great tool for a hedge. It's sitting at, if I zoom out, it's all-time, well, not all-time, but 52-week lows here. So very, very low. This is a low-risk trade. It does move relatively quick though. So this, if this goes back up to where this did, back above the mean here, let's call it 27, you can get, an 8 to 10% move within a few days. And at the same time, it could go lower 8 to 10% within a few days. So this is a big mover. It's not quite as leveraged like a, call option or something like that. But I started adding to this a couple days ago. And, one of my entries methods I use is the DMI stochastic extreme. And when it got to this lower band and it ticked up right in this zone, I got in for about 25 and change, and it dipped a little bit. And basically my plan is we'll see where it goes. But right now, if it goes up, I'm looking to take profits, trail stops all the way up to about 28. But if it sort of goes lower from here, I would simply add to this position. So, take a small position in this, look for a move back up to, I'm going to call it 27. And then trail your stop up by about 50 cents or so until you get stopped out. If it heads lower from here, I would add more to about the 24 with the idea that the market's kind of in this range bound mode. So that's our trade of the week, picking up VXX for an increase in volatility as the market it looks to be breaking down a little bit here. Thank you.